Hey everyone, good afternoon. Can everyone hear me? Oh, I don't know if I even enabled chat. And can we see my screen? If somebody wants to drop a chat in and just let me know that you can see the presentation that says navigating condo financing in today's market, we'll go ahead and get started. My name is Joanne Theriault-Fazio. I am the National Sales Director for Proper Rate. And with me, I have Sam Fazio, Senior Vice President of Mortgage Lending, and we're going to talk about all things condo. Uh, there's so much that we can cover. We don't have nearly enough time. We probably would need, days and days and seminars. But we are going to try to give like a very high level overview. And really, essentially, at the end of the day, we just ask that if you have any questions when it comes to condos, please feel free to reach out and let us know. And we are more than happy to help. So we are going to go over some best practices for realtors and buyers. We are going to talk about deferred maintenance and special assessments and a lot of the changes that Fannie Mae and Freddie Mac have made over the course of the last several months, actually probably going back 8 months now at this point. Some misconceptions about condos, so some maybe like old school way of thinking of how we used to have to do things and what we used to have to look at. We're going to talk on just a little bit FHA, VA, and non-warrantable approvals, because those are also a little bit different. We are going to go over approved lists. We have access to so much information through Fannie Mae and Freddie Mac, and also through all of our family of companies, all 11 plus companies. So we have access to a lot of information out there that we can actually share when you are either taking a listing, have a buyer that's going to be putting in an offer, want to sell your own place. So we have a lot of great information that we can share. And then just wanted to remind you that we do a drawing for Starbucks gift cards, and then one lucky winner will get a Target gift card. And the way you will be able to get that is just by emailing the Theriault-Fazio team at properrate.com and just say like you were here, because we can't see everybody who is on the webinar since it's set up a little bit differently than a regular Teams meeting. So just go ahead and email us. Let us know that you're here. I will drop the email in the chat so that you will have it. And that will enter you into the drawing for either one of the 10 Starbucks gift cards or the Target gift card. And thank you so much for joining us today. Condos has been something we've been talking about for months and months and months. Even the lead up to those changes that happened with Fannie Mae and Freddie Mac in September, we'd been already kind of prepping everybody for what was to come. And a lot of times we get asked the question on, well, why did they make so many changes to their guidelines? And the main reason can be traced back to a building collapse in Florida. I think it now at this point is probably about 3 years ago. The building just came down. There's been several other instances of condos having issues due to, deferred maintenance not being completed, critical repairs not being completed, proper insurance coverage and whatnot. But that Florida building really started it all. There was loss of life. There was obviously a lot of damage that was done as well. And it was just stuff that maybe could have been avoided had there been, proper updates to the property, that the maintenance hadn't been deferred for so long and all those critical repairs had been completed. So I am going to have Sam take it away. And Sam, as you need me to just flip to the next slide, just, let me know. So go ahead.
Gotcha. Yeah. So over the last 12 months, we've definitely seen a lot of changes to what's happened with condos and their approvals. So we kind of just want to touch base on some of those, and then also kind of what you can do as either a realtor or as a buyer to kind of protect yourself if you are looking at condo buildings. So a couple of things that you can do if you're looking to purchase a condo as a buyer is you can talk to your loan officer. Especially if you were to call us, we have access to FHA, VA, Fannie Mae, and Freddie Mac approved and ineligible lists. So that should be your first step, is before you go out and look at the property. Is this property on the ineligible list? If it's on the ineligible list, you know you should probably stay away because it's going to be, you're going to have some difficulty trying to get that property under contract and financed. So you want to stay away from that scenario. As a realtor, what you want to do, there's a couple of things. One, you can always call us. If that property is not on the ineligible or approved list, that just means it has not been reviewed. And there's a couple of things that you can do as a realtor to get that information. One, if the attorneys have already completed a 22.1, which is the attorney version of a condo questionnaire, you can get that and send it over to us and we can review it to see if that, see if there's anything on there that's going to be a red flag or a deal killer. The other thing too is you can also use our cheat sheet, which we can send to you, everyone here after the meeting. If you email that same email address, it gives you 6 quick questions. I think you're going, there it is. 6 or 7 quick questions on what you should be asking the board to see if there are any red flags that are going to be drawn upon that as well. Okay. And in the meantime, while you're getting that, if you can also get, the budgets and the master insurance, that would be ideal as well. So the master insurance right now has also become an issue depending on what the deductible is versus what the policy covers. So there's definitely some issues there. And if we can try to get those out of the way, it definitely helps you, your client, while you're out there purchasing a property.
All right.
I
You
need
want
you
me
to
to
go
flip
back.
back?
Need you to go
Okay.
back. Yeah.
I put that at the end, knowing we would come back to it again too. So,
Right.
All right. Is this where you want me? Misconceptions? And I need to go back more. No,
Wasn't there something on deferred maintenance?
there is. Sorry, everybody. We did not practice this slide before. And also I'm having an issue with my clicker here. Yeah, it's back here. All right. Sorry.
So
Technical difficulties.
the main thing that we're seeing from a lending standpoint right now are issues with deferred maintenance. Okay. So anytime we see a condo questionnaire that comes back and says, yes, there is deferred maintenance on there, we're going to want to know what was deferred. And we're not talking about deferred maintenance like changing a light bulb, changing the carpeting in the hallways. Deferred maintenance is anything that's really going to be structural. Anything that could potentially cause an issue with the safety of the building is what lenders are going to be concerned with. Okay. Then if there was a structural report done within the last 3 years, and that's one of the questions that's on the condo questionnaire and also on our cheat sheet, we're going to need to see that. And if there were any repairs that were notated that needed to be done in order for us to proceed with getting a condo approval, those are going to need to be 100% completed. We're going to need to see the report on that after it's done. So all of these changes are basically coming about just to protect the safety of the building. If it's preventative maintenance, we can work around that. So that's not necessarily the biggest issue, but we're definitely going to be able to work around some of those items as long as it's not notated as a structural issue as far as in the report. The other thing that's changed too is special assessment delinquencies. If there are special assessments, no more than 15% of the units can be delinquent for 60 days or greater. If they are, that's going to cause a problem in the final approval as well. And that is one of those things too that we have to kind of figure out, if it's a seller, let's just say, for example, you're right at the 15 or 16%. Is the unit being sold? Is that one of the ones that's delinquent? Because then we can eliminate that from the equation, right? So if the seller's the one that's putting you over the limit, we can work around that in that scenario. So that's something that I have had this happen recently. And that is something that I had to go back, and it was the difference between getting the loan closed and not getting the loan closed. The unit that my buyer was purchasing was actually the one that was delinquent. So when they sold it, it was brought back current. So it was no longer an issue. So those are just a couple of things to take a look at. And then the other thing too are critical repairs. What we're looking at when we're talking about critical repairs, we're talking about, is there material deficiencies in the property? Again, is there any mold or water intrusions? Water intrusion is probably the biggest issue that we're going to see, and it has to do with like tuck pointing or a roof that, a flat roof that is leaking. Have those things been taken care of? So those are all items that are going to be asked on the condo questionnaire from when we send it out to the association and the management company. So we definitely have to take the entire safety of the building and make sure that everything looks good in that scenario. And that's kind of where we're at with critical repair. So I think you can flip to the next slide.
Well, I was just also going to add that one thing that where the stuff starts to come up in is if the association answers the question, is there deferred maintenance on the property? And they check yes, then we need 12 months of meeting minutes.
Right.
This is a Fannie Freddie thing. And the thing that comes up in meeting minutes, just with so many different things that come up. Some we can definitely get around, some requires additional information. Like Sam mentioned, the water intrusion has been something that's been super popular lately. So we've been seeing a lot of that. But I would be very surprised if zero came up on the meeting minutes. There's always something, especially as you get into these larger buildings and associations as well, because there's just more people. So anyway, I think we did go over this slide. So sorry, we're a little out of order. So want to go over the misconception stuff, Sam?
Yeah, so in the past, everyone's always been worried about what the rental concentration is on the property. If you're purchasing in 49 out of the 50 states, Florida is excluded in this. We can still do an owner-occupied transaction if the condo ownership is over 50%. Or I'm sorry, the renter concentration is over 50%. So that is no longer a deal killer. The only thing is that if you are located in Florida, if you're trying to buy in Florida, that number does jump up to about 75%. So there's going to be you have to put down more money in order to get that done. So you're looking at 25% down payment in Florida if the owner concentration is over 50%. Single entity ownership has always been a thing as well. Now we're looking at no more than 20% of the units in the building can be owned by one single person. Okay. There are different guidelines for Fannie and Freddie, but just assume right now that you have to have at least 20%. You have to have less than 20% ownership of one person owning the units in the building. Anything more than that can cause a little bit of a problem.
One place where we don't even need that information, though, which we get asked this question quite a bit, is if there's 5 units or less. So if you have somebody that wants to buy some of the units in smaller building, it doesn't matter. Like, we don't look at that. Fannie and Freddie don't look at that with the single entity ownership. So just there's a lot of nuances to the condo financing.
Correct. And then, next thing to litigation. Litigation is not always going to kill your transaction. There are certain litigations that are litigation types that will be an issue. If the association is suing a developer or if they're being sued by a contractor, those are the ones that we're really going to be concerned with. If you have issues that are slip and fall or, other petty issues that are between tenants when they're suing each other, that as long as it's covered by insurance, we're going to be okay with that. So really it's the major litigation. If they're suing a developer or a contractor for work that was done, those are going to be issues that we're going to have to one, get the litigation paperwork and could potentially hurt the transaction overall. So the other thing too that we do have some issues with here are condo tells. I think Joanne has more experience with the condo tells than I do. But in this scenario, condo tells are going to be a little difficult. What a condo tell is any type of a property that offers short-term rentals within the condo building. Those are a little bit more challenging to get done through Fannie Mae and Freddie Mac. So those may end up having to be a non-warrantable condo that we might have to take to a different type of investor. Okay.
And then one thing I want to add on the condo tell piece, because this did come up for us this year for a property in Lake Geneva, is if in the association name, the word hotel, which it's not typical, the word resort is in there. There's a couple of words that are like red flags where Fannie Mae actually won't lend on them at all. And then your only option is to do Freddie Mac. So it's also knowing those nuances to know that like it might not fit one box, but it could fit another. And that's also, of course, for a property that just isn't a resort type town, like kind of like how Lake Geneva, Wisconsin is. So that's why the name of the association has that in it. There is no way, shape, or form are they, getting any sort of like income sharing or anything like that for the property. For those types of properties, you can also only do them as second homes and not investment properties. So just a lot of different little nuances if you run into any associations that are a little bit different.
Yeah, and then the last thing too is on the master insurance policy, which is something we will review. The condo, the deductible on that policy cannot exceed 5% of the replacement cost. So if you've got $1 million replacement cost, the deductible can't be more than $50,000. Okay, so those are going to be some things that we're going to look at that come in. And again, that's why we were saying for your best practices, if you can get a copy of that, that would be ideal. A lot of times they're not going to provide that to you, but the seller should be able to get that free of charge. So if you're a listing agent, those are also things that you want to gather in case you have questions, because you don't want to make your job of trying to selling the condo more difficult than it needs to be when you can avoid these things, right? Because if we're going to tell you that it's going to be hard to get an approval on it, then maybe you have to take a different approach to trying to sell the condo, or the client may have to, either take cash or just wait.
And then a few things I've seen come up on master insurance policies lately with some of our loan officers when they're doing condos is common elements coverage, and then not covering the mechanicals, like with, say, central air needs to be covered in the mechanicals, like with the rider policy. So I think too, for me, if I am purchasing a property, if you already own it, it's a little different story. But if you're purchasing a property or you're helping someone purchase a property, you do really want to make sure that they have all of these things. A lot of this stuff that is put into place, part of it's for safety. Part of it so that you don't get hit with a special assessment down the line that's so large, it's, an unreasonable amount to pay, that you don't have damage to your property because of deferred maintenance. And then insurance covers certain things so that, again, you don't end up having to have a special assessment or your HOAs don't go up. So asking some of these questions, or looking at, in Illinois, we have the 22.1, there's something different for every state, but getting some of that information really upfront is, I think, really going to be super helpful and help somebody make a little bit more informed decision about the particular buildings that they're interested in looking at. All right. Anything else you want to talk about on this page, Sam? You want to go to the next one?
Yeah, we go to the next one. So FHA and VA condos. Prior to going out, if you're an FHA buyer or a VA buyer, we need to, there is a list that is available that shows that if the property is already FHA or VA approved. Okay. If the condo association is not on that list, or condo project is not on that list, we have the opportunity to get the unit and the building approved through our condo department. It is going to take, you are going to have the cooperation of the seller to get us the documents, as well as the condo association. And if you did have to go through this process and you're in the middle of the transaction, you have to allow for anywhere between 30 to 45 days for us to gather all the information and then get that into our condo department for review and get them to approve it. So FHA does have a website that you can go to pull down, if you're just looking for a listing, you can pull down the name of the association in the town that you're selling it in and get the information. It'll tell you if it's approved or expired, or if it's not on the list, there's nothing that's ever been done to it. So if the condo is FHA approved or VA approved, it usually makes the process a little bit easier. If it's not, then we definitely have to go through the entire process of getting the building approved. And I do believe that process, like I said, takes about 30 to 45 days to get all that done.
Mm-hmm. Some of the
Now-
things too that FHA and VA care about are they will care about owner investor concentration percentage. So that is definitely going to be on there. They're going to look at the budgets. The other thing that we see in certain metro city areas that comes up a lot on HOAs is the right of first refusal, which is basically like discrimination. Like, I'm not going to let you into this building. And so if bylaws allow for that, then that can be problematic and not get FHA or VA approval. And then the other thing as well is if they're not allowed to rent out any units, like if they allow for zero rental, which is kind of like what you would almost think is like the polar opposite. But essentially FHA and VA want to look at it like, if this buyer buys this property and they get into a jam and they can no longer afford to live there, but they can rent out the property and break even or profit or whatever, we want them to be able to. So again, something that you wouldn't normally think of, but it is something that's on a lot of bylaws in the metro city areas.
Yeah, and then, and then the other option we would have here too, we do have a series of programs that do allow for condos that are non-warrantable, okay, that fall into the category of we can't do it on the conventional or FHA side. Now, when I say that they're non-warrantable, it's on a couple of things. They're still going to look at the deferred maintenance issue because that is still going to be something that is a risk factor that's factored in. If it has to do with either litigation or owner concentration or rental concentration, that is more where the non-warrantable condo is going to help out people. A couple of things, we are, like I said, we are limited as far as investors in those, and those do come with, in most cases, higher down payments and then slightly higher interest rates as well, right? But it could be the difference of getting the condo now and then not, in being able to refinance into a lower rate using a conventional program if that warrantability comes back into play. So there's definitely some options there if your property does not fall into the guidelines of Fannie Mae, Freddie Mac, or FHA.
And our cheat sheet.
And then here is our cheat sheet. Like I said, this is definitely what will definitely come in handy if you have a listing, or even if you're just the buyer's agent, handing this over to the seller's agent or getting in contact with the management association, management company. You can ask those 5 or 6 questions that are on there, get a good idea of, will there be any issues? Is my buyer or my seller going to have any problems trying to get this thing approved? Okay, so again, this is something that we can send out. Pretty easy stuff. Most associations are not going to charge you to give you that information, and they should kind of know that off the top, off the top of their records as far as that goes.
Mm-hmm. Yeah, so I think this is like a good step 2 after you ask us if we can look up the HOAs on the Fannie and Freddie approved and ineligible list, and then look up like our guaranteed rate company database with all of our family of companies. We do a lot of condos, so we do have a lot of data, but some buildings just don't turn over quite as much. Or we really want everything to be newer and fresh. Like last 3 months is always going to be our best point of data in terms of our internal stuff, but the Fannie Mae and Freddie Mac approvals, they'll go for 3 years sometimes. So you may end up having a property that runs into some issues, but they're still on the approved list. So it's good for us to be able to look this information up for you. And then this is our great alternative choice. Sam, along with another one of our loan officers, helped create this document for our company. So it's been really helpful for our agents. And I think that just brings us back to the end here. So our contact information is here. Please, please, please feel free to reach out if you do have any condo questions, or if you're running into something on a listing. We're more than happy to help look things up and answer any questions that we can. And just a reminder that if you were on this call, just go ahead and email Theriault-Fazio team@properrate.com to be entered into the drawing for the Starbucks and Target gift card. And then also so we can send out some information to you about condos and that little cheat sheet that we have as well. That's all we have for today.
Well, thank you very much.
Thanks, everyone.
Hey, bye.